I've been implementing Profit First in my business for over 1 year now. I'm fortunate enough to be attending ProfitCon this year. It's a conference for accountants, bookkeepers, and coaches who are trained in or interested in the Profit First method and want to use it to help their clients. In the lead up to the conference, I've been reflecting on my own Profit First journey and wanted to share it with you. My name is Lena Oduo. I'm a chartered accountant, business coach, and founder of G-Hawk Accounting, where we help businesses build clarity, confidence, and growth by strengthening their profitability and their cash flow. Profit First is a book by Mike Michalowicz, and it offers practical strategies for small business owners to manage the cash in their business. It does not replace your accounting system, but works alongside it. The key principles of Profit First are prioritizing profit for the business owner, and that's because many business owners work in their businesses and never actually take any money out of it because there isn't any left at the end of it. Paying yourself first, putting money aside for different purposes so that you can spend only what is available in each pot. The book recommends 5 separate bank accounts: one for income, one for profit, one for operating expenses, one for owner's pay, and the final one for tax. It's recommended to start with 5 bank accounts, and then when the money comes in, when each client pays, you split the money into the different accounts and you restrict the expenditure based on what is in each account. Last year, I decided to implement the system after meeting an accountant who had implemented it in their business, and they said it was a game changer. I wasn't very keen on opening 5 bank accounts, but I wanted to try the system. So I opened an account with one of the newer banks where you could have pots or spaces where you can keep money into separate categories. And for me, I thought that was an easier approach than opening 5 bank accounts separately. I also needed to make sure that these bank transactions flowed automatically into my accounting software. I use QuickBooks, and the link with QuickBooks Online wasn't provided, so I had to pay for that separately. And this wasn't a problem at the beginning because I wanted to make sure that it worked, and I also wanted to make sure that it was efficient and it wasn't going to take me a lot of time to deal with these additional transactions. Opening the bank account was straightforward. An online application on my phone, uploaded my ID, they did their checks, and I had the account ready in I think 24 to 48 hours. So that was easy, straightforward, all very exciting. I then did my instant assessment. This is an assessment recommended in the Profit First book, which looks at your financial reports for the last 12 months. You look at your profit and loss and your balance sheet and identify how much money came into the business and how that money was used. So I developed a name for it. I called it the Where Did the Money Go exercise, because that's what it felt for me. It was a little bit of an investigation, looking at how much came in and how it was used. This was very revealing because rather than using the usual accounts for preparing the tax returns in the accounting software, the instant assessment recommends splitting the money into just the 5 accounts. How much came in as income? How much came in as profit? How much went to the owner's pay? How much went into operating expenses? There's quite a few transactions which can be in your profit and loss, which is actually owner's pay, but is not identified as owner's pay because it's not salary and dividends. So there's all those nuances to get around, and it was really useful to see what actually falls into the 5 recommended buckets. The idea for this exercise, the instant assessment, is to work out your own percentages of where the money had gone. So if the revenue, everything that came into the business is 100%, how then was that 100% split into the different categories, and what did you end up with, if anything? So these are called the current allocation percentages, or CAPs. The book then also has got target allocation percentages, which is TAPs, for different businesses. And the idea is you look at what your current percentages are and look at the target percentages and then compare to see whether you're on the right track, whether you are ahead of the curve or whether you're a little bit behind, and where you need to make some adjustments, and use that to set your goals for the next 90 days, 3-month cycle. I also blocked some time in my calendar to make sure that I had time to implement this. I believe if you're putting in a new system in a business and you don't allocate time for it, then you're setting yourself up to fail. So I blocked the time in my calendar and I was sure that it was going to work going forward. So what did I learn? I'll be honest and say it wasn't perfect. It was only the first year, a lot of ground to cover in terms of change of behavior and understanding the effect of the system. But the first lesson I learned is that I was introducing a lot of change in my business within a very short amount of time. I already had a system that worked for me, and being an accountant, managing money is not too big of a challenge. I'm already very good at reading the profit and loss and the balance sheet. Unlike what the book says, I look at mine every day. I know not every business owner does that. In addition to that, as a child, my mother used to give me pocket money at the beginning of the term and would expect me to come home with some savings. So that whole idea of not spending everything you have is already instilled in me. I very quickly defaulted to the daily system that I already have instead of waiting for the 2-week checkpoint, which I had set aside for the Profit First system. The second lesson I learned is that when it came to the first 2-week check-in, I found myself referring back to my notes to understand what it is I was supposed to be doing. This is normal with introducing a new system. There is a learning curve. I had set it all up, but really just wasn't very clear what I was supposed to be doing with my time. I had allocated 30 minutes to this task and had made notes that what I needed to do was look at how much had come into the income bank account and then split it based on the percentages and transfer it into the different accounts. Now, what I realized was that I should have set aside at least 1 hour to 90 minutes because I found the initial 30 minutes was not enough. It was a new system I was starting to get used to. I needed to trying to remember where I had filed the allocation percentages and just logging onto the different bank accounts. Yes, that takes time. If I was to do it again, I would give myself a little bit more time. The third thing I experienced was that I wanted to make sure that my regular direct debits didn't bounce. So when the sales income came in, I couldn't move all of it to the accounts because I knew that money was already committed. I didn't spend any time changing the direct debits from one account to the other because I just couldn't see the point of doing that. It was still money that was going to go out and I'd already committed to spending it. So initially, I wasn't able to stick to the allocation percentages that I had given myself. And it took a bit of time to adjust that so that I knew how much was coming out of the different bank accounts at the different dates and to make sure that I honored those obligations. The fourth thing I experienced was that it's actually quite tedious just moving money around, especially if you're not used to doing it. For me, it felt like a lot of pointless additional work. And I guess you can get used to it if you're convinced of the reason why you're doing it. But initially, it felt like an extra layer of unnecessary work. The benefit, however, of sticking with it is when it came to pay my first VAT bill after that initial 3 months, the money was already there in the account, which is really a wonderful feeling. And it's a big reward for just sticking with it. The relief of just making sure you've got the right money in the account when you need it is worth sticking with it, with the whole process. The fifth thing that I learned was psychologically, I was used to having one bank account with a sizable balance in there. And I was okay with all of that. But under the Profit First method, I suddenly ended up having lots of bank accounts with very little money in each account. And psychologically, that made me very worried and it made me concerned. Maybe just because I take comfort in knowing that I've got X amount aside, it always just looked as if I didn't have enough. I don't know whether that's what the system is supposed to do psychologically to make you think that actually you haven't got too much. You can't go and spend it all because it's allocated to different purposes, but it can make you worried if you are not used to it. A positive thing that happened as a result of that is it forced me to reconsider my expenditure. I looked at how much was coming out of each account and asked myself whether it was completely necessary. And I ended up reducing my expenses significantly, which in turn freed up a lot of cash. For example, I cut back on some software subscriptions that I had that I was not quite using. It was at that time that the landlord increased the rent, and I was able to move offices to take a smaller space, which is still adequate for our needs, and ended up saving 16% on the rent and the electricity. And with the office move, it made me review our telephone and our broadband, which we looked for a different provider and are now spending half of what we used to spend before. The benefits speak for themselves. I would say the total savings for me is definitely in excess of £5,000 from implementing Profit Fast in the first year alone. Would I recommend the Profit Fast method? Absolutely, 100%. I recommend it, and I also teach it to my clients. I not only have the main Profit Fast book, they also have got different series for different industries. This one is Profit Fast for Contractors, which focuses on the construction industry and takes into account things like materials and subcontractors. They're all available to buy. I would highly recommend that you get yourself a copy of the book and read it and see if you can start to use some of the recommendations in there for your cash flow management. Remember, it does not replace your accounting system. You must work closely with an accountant because the two systems go hand in hand. Thank you for watching to the end. If you have tried the Profit Fast method, let me know in the section below which bits you enjoy about it or which bits you don't. And if there's anything you've learned along the way that can perhaps help me as I continue to implement a Profit Fast in my business going forward. My name is Lena Oduor. See you on the next one. Bye for now.